In this video, we're going to look at the 3 mistakes to avoid when investing in crypto and how you can easily benefit from them to grow your investment portfolio, increase return on investments, and possibly retire at an early age. Make sure you stick around until the end because I'll also share with you 2 crypto coins to help you see a greater return on investment. So let's jump into it. Welcome to Crypto Game, where we help you amplify your investment strategy and knowledge with weekly content. If you're new here, make sure you click that subscribe button, and all the links to everything we mentioned in this video, you can find linked in the description box below. Now to why you're here. Cryptocurrency has become a popular topic in the last couple years, and will most likely be here to stay with the way technology is advancing. Since COVID, our economy has been on a downward spiral, but we're finally at a point where we can start seeing daylight. Before you jump in and start investing in crypto coins, you should avoid 3 costly mistakes that most people make. Using channels like Crypto Game, you can easily identify crypto coins that should make a significant comeback, because the market never stays down permanently. There's always a correction. So now, we're going to take a look at the top 3 mistakes investors make and exactly how you can use this knowledge to your advantage, starting now. Number 3, people invest their life savings. Rule number 1, do not invest more than you can afford to lose. A great investor goes into something ready to lose whatever they put in. Ultimately, price will always go up and down. You should remain calm and still be living a healthy lifestyle with room for regular everyday spending. Now let's hear from millionaire crypto investor Garrett Soloway's thoughts on overspending.
We all have to fight emotion. Emotion is what is the undoing of an investor or trader. It basically makes them buy Bitcoin at $68,000 and it makes them panic and sell sub 20,000 when maybe that's not the time to do it, right? So you have to look at that discipline, and the way you control discipline is to limit your position size. Like, let me ask you a question. If you had $1 in Bitcoin, and it was going down 80%, would you really care that much? $1.
Right, that's exactly it, yeah.
Right, but if you put $1 million and that was all your money in Bitcoin, are you gonna be like checking the price of Bitcoin every single second? Yeah, you are.
Right.
And so you have to find that groove where it's just under the place where you're gonna have an emotional response, because emotion, as a trader, you need to be robotic. You need to have no emotion. You're basing your decisions. You have a thesis for trading that is on A, B, and C. And as long as those hold true, then you're in the trade no matter if it goes up or down a little bit. You can't have that emotional response.
Number 2, people think that cryptocurrencies are stock shares. If a company creates a cryptocurrency, it is then very possible for that company to profit or to get acquired with no benefit to you. Where shares, on the other hand, you profit when there's growth or when the prices go up, but you also benefit from dividends and royalties associated with that company's growth. A company can be doing very well, but yet their coin price can drop. The only exception are security tokens, which grant ownership to their investors. Let's take a look.
Once a token is classified as a security token, it means that it's representative of legal ownership of an asset, either physical or digital. That ownership must be verifiable on a blockchain. But the true value of a security token lies in its ability to democratize the ownership of assets. For example, in the real estate world, you can't really buy 1/100th of a house, simply because a house can't reasonably be split up 100 ways. But with a security token, one could generate 100 tokens that represent stake in a home. This significantly lowers the bar of capital required to invest and see returns in expensive markets, as well as allowing for group ownership of things that were previously impossible to own in a group. If I can only afford 10% of a house, suddenly I can purchase 10% of a house as an investment and avoid taking on a large loan just to enter the real estate market.
Number 1, people chase cheap coins. There's a new saying that goes, don't chase cheap coins with dreams of Lambos and private jets. Lots of uneducated investors in the crypto space buy low-priced cryptocurrencies because they think there's a higher chance of big returns. A good example of this is if one coin is priced at 1 cent and another at $75. People blindly purchase the 1 cent coin because they feel it's an easier coin to go from 1 cent to 2 cents rather than the $75 coin go from 75 to 150. More often than not, a cheap coin has a huge supply of coins, which dilutes the price of each coin. If the supply is massive and there's a real wide world value, then the price of the coin at 1 cent is not undervalued, but yet should be priced that low. If you want to find the next gem coin, look for coins that have low market caps. They come with a lot more risk, but on the flip side, they generate a higher reward. So now for the 2 coins you should consider adding to your portfolio. First on our list is Litecoin. Launched in October 2011, Litecoin is a cryptocurrency that was designed to provide fast, secure, and low-cost payments by leveraging the unique properties of the blockchain technology. Litecoin was at an annual high of $294.56 just 1 year ago and currently sits at $61.98 per coin with a steady rise in value. Second on our list is DAI. Launched in December 2017, DAI is an Ethereum-based stablecoin whose issuance and development is managed by the Maker Protocol and the Maker DAP, Decentralized Autonomous Organization. DAI was at an annual high of $3.67 just 1 year ago and currently sits at 99 cents per coin with a steady rise in value. You can invest in these crypto coins tax-free by using an IRA loophole. Follow the link in the description below to learn how. Click the like and subscribe button if you found value in this content, and use this knowledge to your advantage. Thank you, and we'll see you on the next video.